welcome all our viewers to today's edition of Money Moves. I am Melissa Enoch here at the FMDQ studios.
And I am Grace Agbaragu. It's Tuesday, the 19th of August. We thank you all for joining us on the show.
All right, then let's now begin. In Côte d'Ivoire, Ivory Coast cocoa grind fell 31.2% year-on-year in July to 39,301 tons, Exporters Association GPEX reported. Grinders cite poor bean quality and low mid-crop volumes, with total grind from October to July at 515,055 tons, down 4% compared to last season. Cocoa arrivals between April 1 and August 17 at Abidjan and San Pedro ports dropped 30% year-on-year to 350,000 tons, highlighting industry pressures from mediocre bean quality and high acidity levels. In Uganda, Uganda's central bank governor Atingi Ego addresses the delicate balance of monetary policy, emphasizing that the exchange rate must remain market determined. He explained why artificial support for exporters could fuel inflation and force interest rate hikes, and highlights the importance of preserving economic stability without distorting underlying fundamentals. Here are the excerpts from his address.
Why is the currency appreciating? There are several factors that are explaining the appreciation of the currency. First and foremost, I'll start with the domestic factors. As you're aware, we have recorded quite strong exports, particularly in the financial year 24-25. And this is linked to the improved coffee prices and also cocoa prices, accompanied by volume increases in the case of coffee. So that impact alone has enabled us to earn slightly over $2 billion in terms of coffee exports. And then we have also had a prudent monetary policy that has maintained confidence and has attracted a number of offshore players into our markets, particularly to participate in the government securities. The prudent monetary policy that has ensured that inflation has remained low and stable itself is causing more inflows to come. And then we have also undertaken a number of reforms in the FX market, particularly strengthening what we call the swap market, where a number of players are increasing in the activity. So what this is doing is that it is relieving pressure from the spot market into now the FX market. Why is it?
In other news, Ethiopia Post is set to launch a digital post box service, CEO Dagimawi Haleye announces. The service is designed to add value and enable the delivery of modern postal solutions supporting the country's digital transformation. With more than 130 years of history, Ethiopia Post has overcome debt and operational challenges, and following reforms was organized in 2016 as one of the nation's top 5 successful institutions. In earnings news, MTN Group CEO Ralph Mupita reflects on the company's strong first-half results, highlighting a return to profit, double-digit revenue growth powered by data and fintech, and an upgraded outlook for the business. Here's what he had to say.
So at the service revenue, we said that we're just widening the lower end of the range to reflect realistically where we are today. We're 2.3. But as we compete, for sure we're pushing towards. And on the margin side, what we're basically saying is that we're going to put a bit more investment into kind of on the distribution end. So for example, and we've already done this, we've changed ongoing commission, the so-called OGR. Our OGR levels are lower than Vodacom and Telkom, okay? So we said to Charles, please go ahead, just look at OGR in terms of the distribution. You all understand how the distribution structures work in South Africa, so we're the lowest OGR. So if somebody else is offering you a higher OGR as you're a dealer, and MTN is number 3, that can't keep us competitive, even though we're trying to protect margins. So we're pushing, we're investing a bit more at the dealer and at the distribution end in South Africa. I think you'll start to see that come through. So the lower end of the range is saying we are showing reality. Because if I said to you, Louise, we're doing 4 to 6, I haven't showed that today, have I? Okay, so let's just lower that range, but the top remains. So let us see how these costs of sales investments improve our market shares, yes or no. So we're still aspiring for healthy market share. We still aspire for 30 to 35% of all net additions in the market. That aspiration has not changed. We're just wanting to be realistic around the competitive dynamics that we're seeing. So there's a lot of work around, let's say, distribution, around devices. The device strategy is quite granular. We have device partners who are bringing devices and attaching the SIM, and we don't have the cost of that, but we're also investing in devices. So our aspirations remain around maintaining or actually growing market share, other than not the other way around, to be clear.
Now, still on earnings, Liberty Kenya Holdings PLC posted a net income of 260 million Kenyan shillings for the half year ended June 30, 2025, a 59% decline year on year. Insurance service results slumped 61% to 225 million Kenyan shillings, even as net investment income rose 4.6% to 2 billion Kenyan shillings. Total assets were slightly higher at 45.3 billion Kenyan shillings compared to 45.2 billion Kenyan shillings in June 2024. The company completed the sale of Heritage Insurance Tanzania on April 4, 2025, with proceeds of 492 million Kenyan shillings against a net value of 520 million Kenyan shillings, resulting in a non-cash accounting loss of 217 million Kenyan shillings. And finally, on today's news now, in Uganda, the East African nation has inaugurated its first large-scale gold refinery, a $250 million Chinese-owned project that will refine bullion to 99.9% purity. The government says the project will help boost exports after gold generated $3.4 billion in 2024, making up 37% of total revenues. Authorities expect the new mine to position Uganda as a major gold producer and exporter in Africa. I am Melissa Enoch, and that's it on News Now. Our market rounds is up after the break with Grace Agbarago standing by at the FMDQ ticker tape room. Welcome back to Money Moves, and thank you for sticking with us. Let's now go over to Grace Agbaragu for our markets review. Hello there, Grace.
Thanks, Melissa. Now let's track today's trading day, beginning with equities. Here in Nigeria, the NGX All Share Index closed at a negative at 1.46%. The BRVM in Abidjan advanced 0.64%. Cairo's EGX closed higher 0.77%, while in South Africa, the JSE firmed 0.38%. Let's do a quick round on some of the Pan-African currencies. The rand strengthened 0.27%, while the Egyptian pound eased 0.14%. The CFA franc was marginally firmer by 0.05%. The Kenyan shilling edged slightly lower, 0.02%. The naira depreciated 0.22% at the official window. Let's switch into the commodities deck, starting with energy prices. Crude prices weakened. Brent fell 1.01%, while US WTI slid 1.14%. Natural gas dropped 2.01%, and ROBOB gasoline eased 0.58%. Over to metals prices. Gold was steady, edging up 0.09%. Copper slipped 0.40%, while aluminium declined 1.24%. Platinum outperformed among all the metals prices, rising 1.31%, while iron ore was little change, up 0.03%. And that's our Money Moves markets today. Over to you, Melissa.
Thank you very much, Grace, for those market updates. And that's a wrap on today's edition of Money Moves. From all of us here at the FMDQ studios, we say thank you for watching and bye for now.